Pinterest stock recently dropped to $26 and it has a PE ratio of 9 with a market cap of $17 billion. Is this too cheap to ignore or is it misleading? Is this a good investment for my personal investment journey? This is what I'm going to cover in this video. I will talk about the business model, some financials, and show the 2030 valuation. Please consider smashing that like button, subscribing to the channel, and let's continue growing together. Please note, this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Pinterest. In full disclosure, I do not own any shares or options in Pinterest at the time of this recording. Please do not buy or sell Pinterest due to this video. Please do your own due diligence. Now, let's first look at why the PE is too low and if it's misleading. Let me now show you a snip. Look at the bottom of the snip where there is one-time income tax credit of $1.59 billion that increased the net income to $1.9 billion. The PE ratio of 9 is based on this $1.9 billion net income, which includes a one-time tax settlement. So this is misleading PE, and in reality, Pinterest is not cheap. So when you look into the operating income, we see $280 million based on a market cap of $17 billion. The PE should be well over 70. So Pinterest is not cheap after all, but it's still growing in high teens percentage. So let us now move ahead and evaluate this company. First, I will start with the business model. It offers performance advertising on a high intent visual discovery platform. Pinterest monetizes via ads. The company has progressively made every pin shoppable via shopping ads, product pins, catalogs, and its API for shopping. Now, let us look at the 2025 snapshot of what is going on with this company. Now, for Q4 2025, revenue guidance was $1.313 to $1.338 billion, which is about 14 to 60% year over year at the midpoint. First quarter, second quarter, and the third quarter of 2025 came in at 16% plus for the first quarter, 17% plus for the second, and 17% plus for the third, respectively. Momentum is broad with outsized growth internationally. Now, management reaffirmed 30 to 34% adjusted EBITDA margin in 3 to 5 years. Now, let's move on to the valuation. So for the valuation, I am estimating 12% CAGR from 2025 to 2030. I think this is reasonable as their current growth rate is in the high teens percentage. I estimate 20% net margin based off the 70% gross margins. I assume 2% dilution each year. I will apply a 25 multiple to get this company close to $50 by 2030. Now, based on the current price of $26, this is a 90% gain in 5 years, which is attractive. So as of right now, I will talk about the risks because I think mentioning the risks are important. Now, the biggest risk is competition. Its peers are mega caps, so this is concerning. In addition, their growth outside the US is great, but they still need to figure out pricing. Also, macro is a big risk for smaller players like Pinterest. Finally, the App Store's policies are a threat as well. So overall, I see almost a 2x in 5 years, but the risks persist. This is not super attractive to me because of the risks. But if it falls below $20, I'm looking at 2.5x, which is probably worth the risk. I think this is probably a trading opportunity, but not a long-term investment for a good risk reward. What do you guys think about Pinterest? Let me know your thoughts in the comments, and thank you always for watching.